Okay, we're concluding Module 1 right now with Module Unit 1.6, which is titled Forms of Business. Now, this is a financial accounting course which deals with accounting principles for businesses, but you got to remember there's all types of businesses. One of them could be actually an accounting services firm, one that provides accounting services for businesses and individuals to make sure they're conducting business properly, not documenting improprieties on their bookkeeping, etc. But what I'd like to do right now is go into more depth of types of businesses that are known throughout the world of business entities. Okay, so similar to the concept of existing types of financial statements, as we talked about a multitude of financial statements thus far and will continue to do so. Businesses themselves, as you know, vary by industry. But within each industry, that's not how they're actually categorized. They're categorized basically through ownership. Business variations are categorized primarily based on who the owners are and if, in fact, they're a small business, medium to large. And no, that's not the three. But no small or medium-sized business has investors. So we're talking about who the owners are and how many. So that's pretty key there. Once again, focus on ownership. Okay, so the first type of business would be considered a sole proprietor. That means it's an individual owner without partners, and it's absolutely unincorporated. So a couple keys there. It's an individual, literally, one person. No partners, not even silent partners. And completely unincorporated. Such as any small business. It could be somebody just owning a shoe shop, a shoe repair shop. It could be somebody owning a toy store. Any type of small business where they're a sole proprietor. They may have somebody conducting their accounting books for them and their different ledgers, but by all in large, it's just one person operating, one name on the business. And then we have a partnership, okay? So a partnership is an arrangement. That's key. Okay? Usually between two, and it could be slightly more persons. Now, in this arrangement, all parties, i.e. the partners, agree to advance together through business operations for their mutual business interests. However, they may be actually individuals coming together, or a partnership can actually be multiple businesses. Okay? Or multiple, as stated, individuals. And like we said, could be two persons forming a handshake saying, let's go into business together, or multiple businesses. Last but not least, as far as the exam's concerned, and other modules and terminologies within financial accounting, we have a corporation. What is a corporation? Well, a corporation, first and foremost, is an artificial person. Now, this artificial person creates laws, basically within them of themselves, i.e. corporate law, as well as laws governed by the state. Now, these laws govern all business that these corporate entities do, which allows them to conduct all different types of businesses. They'll have to declare on financial statements what types of business they are for tax purposes, as well as what types of products they sell, cost of goods sold, showing inventory, or do they not have cost of goods sold, are they selling services? But a corporation, by and large, bottom line, is an artificial person which could also contain multiple businesses, multiple investors, created by the laws of the state. Such as IBM. IBM is a huge corporation, publicly traded, been around for a very, very long time. But that's an artificial person that you're staring at right now. Now, regarding an artificial person in corporate management, it's a very, very regulated structure, much more regulated than a small or medium-sized business. A corporate entity is structured and regulated where they have to offer certain things such as common stock and what have you. Now, it's the largest type of business, so the accounting principles are much strictly applied here. We need to know that as well. There's a lot more room for error and a lot more room for GAAP principles and other violations and other internal controls to be weeded out. Now, remember, with that said, stricter guidelines. More internal controls. Okay? So those are two really intricate parts of a corporate management structure. Oh, last but not least, issuance of stock. And that kind of stock, by and large, by law, is common. Okay, regulations and structures are good. They're good for handling up to thousands of individual stockholders. Okay, the more stockholders and the more investors you have, the more regulations and structure you're going to need. Okay, that's why we have people managing teams of analysts and teams of accountants that all in all coincide with what we're talking about right here. Now, whether it's a small, medium, or large corporate entity, bottom line, they must adhere to all accounting and structural regulations to maintain a proper budget in 2017 moving forward. That's the end of Module 1.